Joining us to talk about some of the trends in the fixed deposit market, Harsh Rungta, CEO of ApnaPaisa.com. Sir, thanks so much for coming in today. Good time to put money in FDs back at 2009 levels?
Oh, it's better than 2009 levels, very clearly. Good time, I mean, see, interest rates on FDs are relative to what the inflation is. So, the difference may still not be very good. Inflation has been rampaging. So, it's a better time, at least you're getting better returns on your savings.
But for the first time in many months, at least the returns are positive, because we're talking about what, 9-10% kind of rates on FDs of certain maturities. And if you look at the inflation level, 7.5%. So at least you're getting a real positive rate of return.
It's true, that depends on how you measure inflation. I mean, whether it's the wholesale price index versus the CPI index, etc. So yes, you're getting better rates. I mean, without getting into this debate about whether it is the best time, clearly you're getting much better rates, including now double-digit rates on certain maturities with certain banks. And senior citizens are able to get double-digit rates because of the, normally banks give 0.5%. Some banks have now started giving 0.75% extra to senior citizens.
Okay. So you have sort of your hand on the pulse of the market. So what is the trend in terms of, which are the maturities which are seeing best kind of returns? What are the banks that are offering the best kind of returns? How much have rates risen by? Just give us a pulse of the market.
So typically the maturity which the banks normally are looking at is between 1 and 3 years. I think that is the maturity end at which banks want to raise deposits. Clearly right now they see the trend increasing, but the trend could ease off, could revert later on. So clearly you're not getting those kind of high rates at longer maturities. So you may not get it for 5 years, for example. And that's why you have all these special schemes. 500 days, 9%. 1100 days, 9.25%. But you do 5 years, 8.6%. So, I mean, they're clearly looking at the middle maturity levels.
So the 1 to 3 year is perhaps where a lot of liquidity is being drawn in. I'm guessing this is all being driven by the overall liquidity situation plus rising rates. So the general sense is that at least a little bit more in terms of positive upticks on FD rates?
We could expect more, because clearly interest rates are expected to rise, and as you yourself said, I mean, deposit rates have not risen at the same rate as credit growth, and clearly there is a scramble. Scramble perhaps is too strong a word. There is clearly need for more deposit. So therefore we should see more uptick in the FD rates in the coming couple of months.
Okay. Sir, is there, any sort of a clear trend in terms of the public sector banks versus the private sector banks? Again, I'm looking at it from a depositor's perspective. If somebody has to measure the rates available on the FD side in the market, any clear trends where public sector banks are emerging as perhaps the ones that are giving higher rates?
Not really. So I don't think we see that trend. All banks are giving better rates than they gave, say, just 6 months ago. And for specific maturities, that I think depends on what the bank itself wants. Most of them in the middle maturity, as I said, 1 to 3 years. Certain private sector banks are more aggressive, and therefore you get slightly higher rates. Public sector banks also are reasonably, I mean, they're competitive on interest rates. The difference between the private and public sector would typically not be more than 0.25 or 0.5%. But as a whole, public sector banks, the bigger ones, I'm talking of the bigger ones, would give slightly lower
than the private sector banks. All right. So the other thing that we're reading a lot more about is this entire premature withdrawal, and a lot of banks saying that we will not penalize you for that. But there's a bit of a lacuna in that. That isn't as simple as it sounds, is it?
Well, there is no lacuna in the fact that when banks announce that there is no premature withdrawal penalty, they're right, they stop charging. I think sometimes customers understand it wrongly. So, I mean, if we take, say, a scheme, for 500 days it's giving, say, 9%. From 365, which is 1 year, to 499 days it's giving 8.5%. And if we say the customer needs to withdraw it at the end of 1 year, and there is no premature withdrawal penalty, some customers think that they will continue to get 9%. And that's what withdrawal of premature withdrawal penalty means. What it actually means is, in normal times you would have got 8.5%, which was the contracted rate for 1 year, minus a premature withdrawal penalty, which could have been as high as 1% or 0.5%. So in normal earlier times, he would have got 8 or 7.5. Now he'll continue to get 8.5. I think it doesn't mean he'll get 9, which is what is available for 500 days, even if he keeps the deposit only for a year.
Okay, so basically you have to view these kind of special schemes in two buckets. So you, for instance, if the example is that up to 1 year you will get X amount, and only if you keep your money in the fixed deposit up to say 550 days, do you get the second deposit. So it's actually two separate schemes.
Not really. So I mean, you contract saying I will give it for 500 days. Obviously, you will get the interest rate that you contract if you keep it for 500 days. If you keep it for less, you should expect to get less. I think that is the point.
All right, perhaps just the way it's being marketed by banks. But net, sir, just last takeaway, you would anticipate through the course of the year, keeping in mind the inflation picture, the liquidity picture, deposit rates, if fixed deposit rates would remain high?
Absolutely. Definitely for the next 6 months, we'll clearly see interest rates remain high, maybe even increase a little bit.
All right, so thanks so much for coming in and helping us understand that. So interest rates are rising. So if you're a borrower, not great times for you, but if you're a depositor, perhaps the times are better than they have been.